Why is the Malaysian Ringgit rising so rapidly? Today, I'll be answering this question with 3 key reasons, and right to the very end, I'll be sharing with you my verdict on whether this appreciation will continue or not. So let's start with the first key reason why the Malaysian Ringgit is appreciating, is that recently there's news that they are applying to join BRIC. If you see the chart over here, you realize that Malaysian Ringgit appreciated massively in end July 2024. While the timing may not fit exactly of the BRIC news, many speculators believe that it is a contributing reason for increased optimism. Take note again, this is just an idea of application. Malaysia is still not in BRIC, and maybe traders are just front-running that idea. Then the question becomes, if Malaysia does indeed join BRIC, will there be more economic prosperity and better currency moving forward? The answer, unfortunately, is no. Egypt is one of the countries that recently joined BRIC, and as you can see in this chart of USD versus Egyptian pound, you would realize that US dollar has strengthened massively against it. Conversely, it also means the Egyptian pound has weakened tremendously, especially in May 2024. That's even after it's been accepted into BRIC already. Egypt right now is facing massive devaluation in currency, and the future trade with BRIC members is not a silver bullet that can save its situation. In any case, it's widely accepted also that Vietnam, Thailand, and Philippines will also be interested in this application, which means it's not going to be such a long-lasting positive effect. My guess again is this is a temporary speculative gain that would eventually fade, similar to what happened when Prime Minister Anwar was appointed as Malaysia's PM. Back in November 2022, Malaysian Ringgit also spectacularly rose in the next 1-2 months ahead. And news headlines actually mentioned that the soaring ringgit after Anwar's appointment is not sustainable. Later I'll explain what sustains a currency strength in the long term. The second key reason for Malaysian ringgit's appreciation is the widely accepted possibility of US Fed cutting rates in the very near term. As mentioned in this headline over here, Asian currencies have hit a 7-month high on Goldilocks US scenario, led by ringgit and won. Many are betting that the Federal Reserve will cut rates as early as September, and it's not just ringgit and won, Thai baht for example has appreciated. So what exactly is driving this forecast of Federal Reserve possibly cutting rates very soon? Back in start of August, there was bad jobs report in US. That very news suggested that recession risks would be increasing. Goldman Sachs actually increased the possibility for 15 to 25%. In that very news itself, US dollar fell against Malaysian Ringgit as well as many other currencies. Because there's this logic. If there is a recession in US, logically Fed will cut rates even more aggressively than expected. This 5.25% could come down significantly, say to maybe 3%. So this impacts two things specifically. The first is something called interest rate differential. Right now, if you see over here, Malaysian Ringgit actually pays an overnight interest of 3%. If you compare that to US Fed of 5.25%, you would realize that it's logical, correct, to borrow ringgit and buy US dollar. This move itself will make you a gain. So similarly, when there's expectation of US 5.25% coming down, traders or investors will unwind that position. Very similar to unwinding yen carry trade. The second is that when US Federal Reserve cuts, USD starts to lose value. What global investors will next look is towards emerging markets. Historically, the direction of US dollar has been closely linked with the performance of emerging markets. In fact, this is a negative correlation. During periods of prolonged USD strength, emerging markets tend to underperform. In periods of USD weakness, emerging markets tend to outperform. And the reason is because global investors will start to shift their focus to areas where there's possible growth. This is probably the strongest tailwind for more ringgit appreciation in the next few months ahead. The third reason why the Malaysian Ringgit is appreciating is the recent strong GDP results of Malaysia. This news in itself has brought the ringgit all the way up to 4.37 per US dollar and 3.34 per Sing dollar. So why exactly does GDP impact the currency strength? Mentioned over here, a lower than expected GDP means that an economy is not growing. Conversely, a higher than expected GDP means that the economy is fast growing. Malaysia's GDP actually accelerated to 5.9% in second quarter, which is above analysts' expectations. OCBC, for example, has quickly revised Malaysia's 2024 GDP forecast up to 5% from 4.2% for the year. GDP is impacted by quite a few things, mainly consumption, investments, government spending, and net exports. We'll focus on the first and the last. The first is actually on consumption. What drove Malaysia's strong GDP numbers was strong household spending. Economists have mentioned that this has been bolstered by cash handouts that were given by the government cuts in diesel subsidies, festive spending, and EPF withdrawals. EPF is actually Malaysia's pension scheme and it's been recently restructured to allow early withdrawals. The headline also reads that experts say a delicate balance is needed because if people withdraw from the pension scheme, there's more spending now. It looks good, but in future, that could become a national burden. Between the years of 2020 to 2022, 8.1 million Malaysians took 145 billion ringgit out of retirement funds. After the general election of November 2022, former minister has even urged government to allow another round of EPF withdrawals for those in need. However, that has not been put through. So household spending wise, I think it's a temporary blip upwards. Then the other factor that impacts GDP is strong exports. Malaysia's exports actually surged 12.3% in July, which is the fastest pace in nearly 2 years. As mentioned, Malaysia produces commodities and electronics and makes shipments to advanced economies. The biggest trade partner for Malaysia is China, and even though that contracted in July, deliveries to US, Europe, and Taiwan specifically for semiconductor industry surged upwards. If you are curious about top 10 exports for Malaysia, this is the list. At the very top, electronics is the main component. Followed by that are 3 commodity components: petroleum, LNG, and palm oil. If you were to take a deeper dive into the GDP, you would see that services has inched up. That's because of better consumption, which may be temporary. But manufacturing and agriculture surging upwards seems to be a more sustainable contributor to GDP growth. How well Malaysia does in GDP performance in the next few quarters ahead really depends on government's efforts to make its industries more competitive in the long term beyond just relying on a cheap currency. Malaysia is able to export now because currency has dropped a lot. But once currency starts to appreciate, export competitiveness tends to tilt backwards. Many emerging economies rely on manufacturing and price competitiveness. Sometimes that works in favor, sometimes that works against. For this moment, it is working in favor. Coming to here, if you have learned something already, smash the like button. And let me share with you my verdict on where the Malaysian Ringgit might trend towards. If we look in terms of US dollar to Malaysian Ringgit, the correction has been very rapid. My verdict is that there's only probably 3 to 5% left in terms of further correction, if any, unless the US Federal Reserve cuts interest rates beyond all imagination. Against the Sing dollar, Malaysian Ringgit right now stands at 3.34. Maybe it could climb slightly bit more further to 3.25. Or rather stick with the long-term trend, which is over time it will depreciate further. And that's why I think in the short term, there should not be any FOMO, fear of missing out, to quickly buy in Malaysian Ringgit. Let me know if you agree with my verdict or not. And as always, thank you for watching right at the very end.